Hello everyone. In the last class, we learned about trial balance. It means what? It is a statement that lists all the ledger account balances at a specific date. It means it helps to check the total debits equals the total credits, ensuring that the books are mathematically correct before moving to financial statements. Okay, so in today's class, we are going to learn about the preparation of trial balance. It means what? Means the main methods of preparing a trial balance. How we will prepare the trial balance using these three methods. They are first one total method and second one balance method and third one is total cum balance method. So now we will learn one by one. In that first one is total method. This method lists the total of debits and credits for each ledger account. So in this method we will record only the total of debits and credits for each ledger account. Okay, so here I will explain this total method through one example. Before that, see, in the accounting process what we will do? First, we will identify the transactions. After that, we will prepare the journal entries. After that, we will post them, means these journal entries into the ledger accounts. Means we will open separate ledger accounts. Okay, after that, we will prepare the trial balance. Okay, this is the accounting process. Okay, so in my previous classes, I explained about how to pass the journal entries and post them into the ledger. Please watch that classes first and proceed with this one. Now, let's see the example. First, see the transactions here. Business started with cash rupees 2 lakh and opened a bank account with rupees 80,000. Cash sales rupees 15,000. Salary paid in cash, that is rupees 6,000. Now what we have to do? Next step is we have to prepare the journal entries. So first one is business started with cash, that is rupees 2 lakh. It means what? So the journal entry is cash account debtor to capital account and write down the narration, that is being business started with cash, that is rupees 2 lakh. Second one is open a bank account, means bank account debtor to cash account, rupees 80,000. Next one is cash sales rupees 15,000, means cash account debit what comes in. So cash account debtor to sales account, that is rupees 15,000. Next one salary paid in cash rupees 6,000, means salary account debtor to cash account being salary paid in cash, that is rupees 6,000. Okay, these are the journal entries. Now what is the next step? We have to prepare the ledger accounts. See here. Now we will prepare the ledger accounts. In that first what we have to do? First we need to open cash account. See here. Cash account. See, this is the format of ledger accounts. Cash account. Here in the first journal entry, cash account is debited. Right? So, go to the debit side of the cash account and write down the opposite entry of cash account. The opposite entry of cash account is capital account. So, to capital account, that is rupees 2 lakh. In this way, we have to prepare the ledger accounts. To sales account 15,000 and by bank account 80,000, by salary account, that is rupees 6,000. Okay, this is about cash account. After that, next we have to prepare the capital account. So capital account, here only one entry will come, that is by cash account, that is rupees 2 lakh. Next one is bank account. So we have to open the bank account. See here, bank account, that is to cash account, means open the account with bank, that is rupees 80,000. And cash account, here we have already prepared the cash account. Next one transaction is cash account debtor to sales account. Cash account is already prepared. Now we have to open the sales account. See here, sales account. So by cash account, that is rupees 15,000. Next one salary account. Next transaction is salary paid. So we have to open the salary account. So here we have opened the salary accounts. Here salary account to cash account 6,000. Here salary account is debited. Go to the debit side of salary account. Write down the opposite entry of salary account, that is to cash account, that is rupees 6,000. Okay, and cash account, we have already opened the cash account. Okay, in this way we have to prepare the ledger accounts. Okay, so this is about journal and ledger. Next, what is the next step? We have to prepare the trial balance. Here we will prepare the trial balance using total method. Okay, in this total method, it tells that it lists only the total of debits and credits. Total of debits and credits for each ledger account. It means what? See here, total of debits. Usually what we will do, if we prepare the ledger accounts, means here cash account, we have to close this account. Right? Means we have to write down the closing balance here. Means by balance carried on. Okay? But in total method, we will record only the total of debit and credit. Debit and credit. Okay? We should not record the closing balance in total method. So, see here. So, the format of trial balance is account title, ledger folio, debit total. Write down the debit total and credit total. So, here first one is cash account. First one is cash account, or write down cash. Okay, so in this what we have to do? See here, debit total is 2 lakh plus 15,000. 2 lakh 15,000. Okay, so write down debit total 2 lakh 15,000. And see here, 80,000 plus 6,000. Credit total is 86,000. Credit total 86,000. Okay, in this way we have to prepare the trial balance. Next one, bank. Okay, bank. Debit total is rupees 80,000. Debit total 80,000 and credit total is nil. Credit total is nil here. Okay, next one, sales account. Sales. So here, see here. Debit total is nil and credit total is rupees 15,000. Okay, so debit amount is nil, credit total is rupees 15,000. And next account is salary account. See here, salary account. Write down salary. And next one here, debit total is 6,000 and credit total is nil. Okay, see here, debit total 6,000 and credit total nil. Okay, next one, last one, capital account. See here, capital. Okay, in capital, debit total is nil and credit total is rupees 2 lakh. So, write down capital, debit total nil, credit total is 2 lakh. Trial balance, it means what? It means it helps to check total debits equals the total credits. Okay, total debits equals the total credits. Let's see. See, now total the debit column, say 2 lakh 15,000, 80,000 plus 6,000. That is rupees 3 lakh 1,000. 3 lakh 1,000. And here credit column 86,000 plus 15,000 plus 2 lakh. See here. Debit equals to credits, that is rupees 3 lakh 1,000. Okay. So here this total method is less common in practice. Why? Because as it does not clearly show the individual account balances, means here it will not show the individual account balances. Here we have not closed the cash account. Here we are not write down the closing balance. Here we are recording just total debit amount and total credit amount. Okay, here we are not recording the closing balance. So it does not clearly show the individual account balances. Okay, and because it only records total transactions, means total amount of debit and credit posted in the ledger. Okay, rather than the remaining balance. Remaining balance means closing balance after adjustments. And there is no clear distinction between asset, liability, income and expenses balance. Okay, this point means there is no clear distinction between asset, liability, income and expenses balance. It will come in the second method, that is balance method. Okay, here I will explain this point, and it complicates financial statement preparation because after trial balance we have to prepare the financial statements, right? But it complicates the financial statements preparation. Why? Because the net balances are required for preparing the financial statements. Means here closing balance. We need closing balance. Net balances are required for preparing the financial statements. But the total method, it does not provide this information. In this total method, we will record only the debit total and credit total. Okay, fine. I hope this method is clear to you all. Now we will move to the next method, that is balance method. Okay, what does it mean? Let's see. See here. So balance method, it means the balance method is the most commonly used approach for preparing the trial balance. Means here in trial balance we will use the balance method in most of the cases. Okay, in this method only the closing balances of each ledger account, means by balance carried on. Only we will use closing balances. Closing balances of each ledger account are recorded instead of the total debits and credits. Means here we will not use the total of debits and credits. Here we will use only the closing balances of each ledger account. Okay, now we will see how it works. Okay, at the end of an accounting period, each ledger account is balanced. At the end of an accounting period, each ledger account, means we have to balance each ledger account. After that, if the total debits of an account exceeds the total credits, means what? Debit amount that is more than total credits, or debits of an account that exceeds the total credits, it has a debit balance. We have to consider it as a debit balance. It means what? It will come, means in this assets expenses will come. And third one, if the total credits of an account exceeds the total debits, it has a credit balance. Means credit balance that is more than debit balance, we have to consider it as a credit balance. It means what? In this liabilities will come, income will come and capital will come. Okay, and fourth point, that is these final balances are transferred to the trial balance under the respective debit or credit column. Okay, and the total of both columns should be equal, confirming the arithmetic accuracy of ledger posting. Okay, this is about balance method. Okay, in this, these 2 points are very important. If the total means debit column that is more than total credits, we have to consider it as a debit balance. Means in this assets and expenses will come. And if the total credits they are more than the total debits, it has a credit balance. Means liabilities, income and capital. Okay, here I will explain this balance method through one example. Here we will take the same example. See here, ledger account. First what we have to do here? At the end of an accounting period, each ledger account is balanced. Each ledger account is balanced means first we will balance the each ledger accounts. Here debit balance, that is rupees 2,15,000. Here credit balance is only 86,000. Means here 2,15,000, and by balance carried on, it means what? It means this is the closing balance. So 2,15,000 minus 86,000, that is rupees 1,29,000. 1,29,000. Okay, write down here 1,29,000, 2,15,000. Okay, here see the next point here. If the total debits of an account exceeds the total credits, it has a debit balance. Assets, expenses will, here assets and expenses will come. Total debits of an account exceeds the total credits. It has a debit balance. It means what? Here see, in this cash account is what? It is an asset. Cash is an asset. Right? Here debit exceeds the credit, means debit amount that is more than credit balance. Here 2,15,000. Here only 86,000 is there. Right? So our closing balance is 1,29,000. It means what? Here we have to consider this closing balance as debit balance. If debits of an account exceeds the total credits, it has a debit balance. And here assets and expenses will come. Cash account, it is an asset. Clear? So here we have to consider this balance carried on as a debit balance. Debit balance. Okay. So this is about cash account. Now we have to close the bank account. See here. Bank account. Bank is also an asset. Right? Why? It is an asset for whom? For individuals and businesses, because it represents funds owned by them and available for use. Okay. See here also debit balance is more than credit. So here by balance carried on, that is rupees 80,000. Total 80,000. To balance brought down, that is rupees 80,000. So write down here also to balance brought down. This is the opening balance. Okay, that is rupees 1,29,000. Here in the balance method we need closing balance. Okay, this one we have to write down the amount in the trial balance, that is the closing balance amount. Okay, see here bank account. See here, if the, what is the rule? Debit of an account exceeds the total credit, it has a debit balance. See here, bank account, it is an asset, because for whom? For individuals and businesses, because it represents funds and owned by them and available for use. So by balance carried on, if the debit amount that is more than the credit balance, it should be considered as a debit balance. Debit balance, this is very important in balance method. Okay, so this is about bank account. Next one is sales account. Sales is what? Sales, it is an income. Correct, sales is an income. Okay, so what is the rule here? Total credits of an account exceeds the total debits, it has a credit balance. Example, liabilities, income and capital. Let's see, in the sales account, credit balance is more. In the debit balance, there is no balance. So here, to balance carried on, that is rupees 15,000. 15,000 by balance brought down, that is rupees 15,000. Okay, to balance carried on, if the credit balance more than the debit balance, it means what? It has a credit balance. We need to consider it as a credit balance. And in this, liabilities will come, and see here, liabilities, income and capital. And sales, it is an income for us. Sales is income for us. Okay, clear? Next one, salary account. Salary account. Salary, it is an expense. Why? Because it is a cost incurred to run the business and pay employees for their services. Okay, so salary account, it is an expenses. So expenses means what? Total debits. It is more than total credits. Has a debit balance. Okay, see here, total debits more than 6,000. There is no balance in the credit side. So by balance carried on, 6,000 means debit balance. We have to take it as a debit balance when we record the amount in the trial balance. Okay, 6,000. To balance brought down 6,000. Next one, capital. Capital. It will come in the, if the total credits of an account exceeds the total debits. See here, total credits exceeds the total debits. It has a credit balance. Means liabilities, income and capital. See here, income. See there, capital. Credit balance is more than the debit balance. Credit balance 2 lakh and there is no balance in the debit. Okay, so to balance carried on rupees 2 lakh, and it means what? It means credit balance. Okay, write down here, close the account, 2 lakh. To balance brought down, that is rupees 2 lakh. Okay, see, write down in the credit balance, debit balance, like this you have to write down. Okay, then it becomes easy for you prepare the trial balance. Okay, now let's prepare the trial balance. Okay, see here, trial balance under balance method. In balance method, what we have to do here? In this method, only the closing balances of each ledger account are recorded instead of total debits and credits. Okay, first one is cash account. See here, write down the account title, that is cash. Cash, it is an asset. Okay, so here asset means here debit balance, by balance carried on. If the debit column, that is debit, exceeds the credit, here debit exceeds the total credit, it has a debit balance. Means here rupees 1,29,000, this closing balance we have to write down in the debit side, that is rupees 1,29,000. Okay, so cash, it is an asset. Okay, this is very important. Okay, so these rules are very important in the balance method. And next one, bank account. In the bank account, it is also an asset. Bank account also asset. So the debit exceeds the credit, it has a debit balance. Means here write down bank and see, balance carried on, closing balance, that is rupees 80,000 in the credit side. But the rule is debit exceeds the credit, it has a debit balance. Means we have to write down this amount in the debit side, not credit side. Okay, so that is rupees 80,000. Next one, sales. Sales, it is an income. For income, what is the rule? Credit side more than debit side. Means it has a credit balance. Here closing balance, that is rupees 15,000, it comes in the debit side, but the rule is credit exceeds the debit, it has a credit balance. Means here we have to write down the sales account, that is rupees 15,000 in the credit side. Okay, that is rupees 15,000. See here, sales credit side rupees 15,000. Next one, salary, it is an expense, assets and expenses. The rule is for assets and expenses, debit side more than credit side. Here closing balance will come in the credit side, that is rupees 6,000, but as per the rule, if the debit exceeds the credit, it has a debit balance. So we have to enter the amount in the debit side, that is rupees 6,000. Salary, debit side rupees 6,000. See, salary debit balance, that is rupees 6,000. Next one, capital. Liabilities, income, capital. For them, the rule is credit exceeds the debit. To balance carried on rupees 2 lakh. Here closing balance is rupees 2 lakh. It comes in the debit side, but the rule is if the credit exceeds the debit, it has a credit balance. Fine, that is rupees 2 lakh. Write down in the credit side, correct. Capital, that is rupees 2 lakh. Okay, now we have to total the debit and credit side. So here 1,29,000, 80,000, 6,000, that is rupees 2,15,000. Next credit side plus 2 lakh, that is rupees 2,15,000. Okay, so see here, debits equals the credit. Okay, so this method efficiently verifies the accuracy of ledger balances, and it is the most widely used method for preparing a trial balance. And you have to remember these 2 points. Okay, for assets and expenses, and for liabilities, income and capital. Okay, so these are very important. Okay, so I hope this balance method is clear to you all. Now let's move to the third one, that is total cum balance method. Total cum balance method. In this what we will do, let's see. See here, in this total cum balance method, it is a combination of, okay, see the name, total cum balance. It is a combination of total method and balance method. Total method means what? Records only total debit and credit of each account. And balance method, here we will record only the net balances of each account. Means here we will record only the closing balance of each account. Okay. Now let's see the example. See here. Just we have to copy the total method and balance method. So account title cash. See the format. See account title LF, total debits, total credits. This is for total method. Debit balance, credit balance. See the names. For total method we have to write total debits, total credits, and balance method debit balance and credit balance. Okay, these 2 are total method, and debit balance, credit balance. This is related to balance method. Okay, so cash. See here. Total method cash account. Debit total, credit total. 2,15,000, 86,000. Write down here 2,15,000 and 86,000. 2,15,000 and 86,000. Next, see the balance method. For cash, debit balance 1,29,000 and there is no credit balance. Rupees 1,29,000. Okay, so next one. One minute. Next one is bank. Okay, bank. See the total method. Total method bank, debit total 80,000 and here credit total is nil. So write down debit total 80,000, credit total nil. And in the balance method bank, debit balance 80,000, credit balance nil. Debit balance 80,000, credit balance nil. See. Okay. Next one is sales. In the total method, sales, debit total is nil and credit total is rupees 15,000. Sales, credit total 15,000, nil, credit total 15,000. And in the balance method, sales, credit balance 15,000 and debit balance is nil. Credit balance 15,000. Okay, next one is salary. Total method, salary 6,000, credit balance is nil. Total method, debit balance is 6,000, credits nil. And here in the balance method, salary, debit balance 6,000. Credit balance nil. Next last one is capital. In the total method, see here. Debit total nil, credit total, that is rupees 2 lakh. And in the balance method, debit balance nil, credit balance rupees 2 lakh. Rupees 2 lakh. Now total. Debit equals credits. First we will see the total method. 2 lakh 15, 80, 6,000. That is rupees 3 lakh 1,000. 86,000, 15,000, 2 lakh. See here, 3 lakh 1,000. Next one, balance method, debit balance 1 lakh 29, 80,000, 6,000, 2 lakh 15,000, 15,000, 2 lakh, 2 lakh 15,000. Okay, in this way we have to solve the problem. Is we have to prepare the trial balance in the under total cum balance method. Okay, but this method provides both transactions total and closing balance. Okay, total and closing balance, making it a detailed way of checking ledger accuracy. But this method, it is rarely used in practice. Why? Because it is more time consuming, okay, than the balance method. Because in this total cum balance method, we have to check total method also, balance method also. So it is time consuming. Okay, so finally, balance method, it is the most commonly used method for preparing a trial balance. Okay, so see here, this balance method, it is the most commonly used method for preparing a trial balance. See, in this total method, here we will record only total debits and total credits, but for preparing the financial statements we need net balances. And this total cum balance method, it is very time consuming method, but this balance method, it is the most commonly used method for preparing the trial balance, because it provides a clear summary of ledger account balances. Clear summary of ledger account balances, okay, which is essential for what? Which is essential for preparing the financial statements. So balance method, it is the most commonly used method for preparing the trial balance. Okay, so I hope this concept is clear to you all. If not, please leave a comment.